Shares in Strategy have been moving up in the pre-market. Now, this is the world's biggest corporation that holds Bitcoin. It's called a Bitcoin Treasury Company. We are joined now by Lance Vitanza, Managing Director and Senior Research Analyst at TD Securities, who says volatility in Strategy, it's not a bug, it's a feature. And this stock is meant to rise and fall with Bitcoin. Thanks very much indeed for joining us. Lance, we're tight for time, and I'm so sorry, but the essential value of Strategy is the Bitcoin it holds.
Thank you for having me. Yes, the premise of Strategy and the brilliance of Strategy is that it has taken a highly volatile asset, Bitcoin, and created securities that have either amplified or tempered that volatility. So it's not just that it owns a lot of Bitcoin. You could buy an ETF and get exposure to Bitcoin. But with an ETF, you know, you're not going to be able to increase the amount of Bitcoin that you own per share, whereas with Strategy over the past, several years, they've been able to increase their holdings of Bitcoin on a per share basis dramatically.
You probably saw that Michael Burry, the hedge fund manager, took a swing at Strategy, arguing that this company, if Bitcoin goes on weakening, could find, quote, capital markets essentially closed. And he said additional drops could push the Bitcoin miners towards bankruptcy. So is Burry overstating the threat here?
Well, I think there's some validity to that, but there's a lot of confusion around this point. We don't see any realistic scenario in which Strategy is forced to materially alter its game plan, let alone sell any of its Bitcoin.
Oh.
The company has fixed charges of about $900 million. Its first note maturity is a $1 billion convertible obligation that becomes puttable in September of 2027. It's a discrete put, but let's assume the worst, and let's assume that that's put back to the company in September of 27. Now, the software business does generate some cash, but let's be conservative and assume that dries up. The company has built a $2.25 billion cash stockpile. So without raising another nickel, the company can redeem the notes that are put in September 27 and pay interest and dividends for another 16 to 17 months. So a lot of people are focused on, well, what's the Bitcoin price at which the company's assets no longer exceed dividend, the value of its liabilities, and that price is about 23,000 per Bitcoin, by the way. But that misses the point. Bitcoin could fall to zero today, and the company could simply hunker down and wait for a potential recovery. They are funded into 2028, and that's before they raise another nickel. Now, last month, January of 2026, the company raised over $3 billion of public equity capital, common equity capital. They raised more than that if you include the preferred shares that they also sold. My point is that for a company that can raise $3.3 billion in a very challenging crypto environment, I don't think investors should be overly concerned about this company's ability to meet its what we consider very manageable and prudent financial obligations.
Right. So it's not going to default on its debt, in other words, in the foreseeable future anyway.
Well, not only in the foreseeable future, but it's hard to imagine that the company wouldn't be able to raise, they have a total of $8.2 billion of convertible debt that is puttable or matures starting in late 27, as I mentioned, and continuing into early 29. But let's consider the bulk of it as being a 2028 problem. Again, in order to solve that problem, the company, worst case scenario, they would have to go out and raise an additional $6 or $7 billion. Well, they raised, roughly half of that last month.
We'll have to.
So,
Lance, I'm so sorry to cut you off. Thank you very much. I didn't know a lot of that stuff about Strategy. You covered a load of ground there. Thank you very much indeed.
My pleasure.
Lance Vitanza, Managing Director and Senior Research Analyst at TD Securities.